Oil daily forecast, December 30th, FXEmpire.com. The light sweet crude daily chart in front of you, as you can see, uh, is showing several different things. We are showing a downward channel, which we saw a failure at during the Wednesday session in a sell off. We could possibly be showing the beginnings of a bullish flag, which of course would measure quite strongly above the breakout point, perhaps as high as about $140. And then, of course, we have the 102.50 level, which is such massive resistance. So, looking at the session for Thursday, it's very interesting to note that we originally had a fall only to turn around and form a hammer by the end of the session. A breakout above 102.50 would trigger this as a bullish flag and it could become a very long-term buy and hold type situation. Of course, one has to think that if oil climbs too rapidly, it would hurt the global economy, and we may see a return to previous time when we had $148 a barrel of oil that absolutely turned out and collapsed, lost well over $100 a barrel in very short order because it was starting to hurt the economy, which was causing for less demand. There are real questions about demand right now, and as such, one has to think this is more macroeconomic, probably even more headline driven type of trading. However, even with the bullish action, we still feel, at least currently, that the downward trajectory is probably the most likely of all. Would not buy here. We need to clear at least 102.50 before we would consider going long because of the obvious resistance from at least two different angles on this chart. Looking at the Brent, it fell as well during the Thursday session, but popped up to form a hammer just like its cousin. Based basically at the 107.50 level, and it does look relatively supportive. You will notice though that we've chopped through it several times, so it's minor support resistance, not major. What we feel going forward is the Brent markets simply just aren't going to be as dynamic as the light sweet crude that are a little bit more obvious with a couple different possible plays. This looks more like consolidation to us, and perhaps we will see continued consolidation between the 102.50 and the 112.50 area going forward. Certainly, with the 30th being the last trading day of the year, one thinks that probably won't see too much in the way of action for Friday. Having said that, it does set up to kind of see where we're going in January once the traders get back. We believe that a lot of what will push us around will be things going on with Iran, and the Iranians do look to be backing down, so we think eventually we may see a little bit of a sell-off. But having said that, we still have very well-defined support and resistance and consolidation here. So currently going forward, we are looking to play this as a consolidation play. As we are in the center of it, we would prefer to wait till we get to the top to sell or the bottom to buy until proven otherwise.